Good afternoon, and thank you all for joining us today. I am Nin Desai, and I will be your host. I started my professional career at Merrill Lynch with their private client group. At Merrill, we managed portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, and internet and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was SIRCON, a software as a service provider company. The 2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPOs means no exit for VCs, no return for LPs, and as a result, venture funds were on a decline. No new funds means less startup funding, low employment, and slow economic growth. Thus, on April 2, 2012, the Jumpstart Our Business Startup Act, or the Jobs Act, was introduced, which enables crowdfunding for all Americans, and that's how Mint Ventures came into existence. Crowdfunding is the practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. Mint Ventures is a first-of-its-kind technology venture capital fund to be marketed, raised, managed, and reported online. The general solicitation and general advertising under the Jobs Act and Rule 506(c) of the U.S. Securities Act made it possible for us to raise this fund. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. Mint Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. Ninda VC has been the recipient of numerous awards, and I was also awarded 2015 CEO of the Year Illinois for innovation and contribution to the venture capital and private equity industry. The private equity industry Fund Manager Award 2017 was also given to us. Venture capitalists are known to invest in unicorns that prove to be home run for their LPs. In 2016, 9,719 venture capital deals were announced, valued at $134 billion. While this represents the lowest number of deals in any year since 2013, 2016 saw a high record aggregate deal value. Here are some of the most popular industry sectors for venture capital investments in fourth quarter of 2017. Ninda VC is a unique and first of its kind $25 million venture capital fund that invests in Series A and B rounds of disruptive technology companies. We write checks anywhere from $1 to $5 million. For example, 3D printing or personalized medicine. The trifecta of medical problem solving powers physicians to use patient-specific data to capture, manipulate, and ultimately apply those solutions to all shapes, sizes, and materials to produce unique parts that can be rapidly and simply manufactured. Ad tech. As consumers spend more time watching digital content disrupting the traditional TV market, it has created a huge opportunity for the digital advertising industry. Fourth Industrial Revolution. The first industrial revolution used water and steam power to mechanize production. The second used electricity to create mass production. The third used electronics and information technology to automate production. The fourth industrial revolution, powered by additive manufacturing, robotics, AI, IoT, AR, will transform the manufacturing landscape forever. For example, media. Over the few years, technology has changed the way people read and watch news or obtain information, jeopardizing revenue streams, employment, etc. for the ever-challenging media industry. At Ninda VC, It all starts with a disruptive technology. A disruptive technology is an innovation that changes the way an existing industry functions and creates new value networks, displacing an earlier technology or way of doing business. We invest in an entrepreneur because entrepreneurs build companies, not the other way around. Being an entrepreneur is the hardest job in the world, and entrepreneurs face varied challenges when it comes to taking their disruptive technologies to market. The few attributes that we look for in an entrepreneur is the ability to dream big, experience and expertise in the industry, ability to communicate with the team and outside, flexibility to adapt to fast-changing environment, and certain personality traits like being focused, dedicated, disciplined, and working hard to accomplish their goals. As long as a company has certain ingredients like a good management team, a disruptive technology, a viable product, a revenue-generating strategy, they form a basic foundation that lead to long-term success. We at Nin.VC like to invest in companies that are going to stand the test of time. Please watch a short video to learn more.
Here's a cool new idea, venture capital that is crowdsourced.
It's the subject of this morning's Weekend Web. Here's Charlie Winterhusk.
Good morning. Here on the Weekend Web, we love to show you startups and how they're growing here in Chicago. Small companies that have great ideas that grow into big companies with big national followings. But how do they get big? They turn to venture capitalists like Desai.
Thanks, everyone, for being here and your interest in our panel. We're fortunate to have some of the leading names in the space in Chicago.
Hi, I'm Desai. I head a crowdfunded technology venture capital fund based here out of downtown Chicago. We invest in Series A and Series B rounds, disruptive technology companies, and write checks anywhere from $1 to $5 million. A disruptive technology is an innovation that changes the way an existing industry functions. So one of the deals we're currently involved in is in the 3D printing space. So if you currently go to your doctor with a damaged liver, your doctor will put you on an organ recipient list. That recipient list runs about 123,000 people, and it increases at an average of 12% annually. On the other hand, organ donor list increases at 1 to 2%. About 21 people die every day because they can't find the right organs. What if 3D printing can help some of those lives?
So you're saying actually tissue printing using 3D printing technology?
Yes. That is correct.
Absolutely.
And 3D printing is also applicable in multiple different industries, for example, manufacturing, aerospace and defense.
Of course, we've seen that in printing, turbines for jet engines and such. But printed organs, essentially amazing. Tell me about some of the other interesting and disruptive technologies that are involved in things that are on the literally the cutting edge.
I believe at some point every industry is up for disruption. I believe your industry, the media industry, is up for disruption. I can't remember the last time I turned my television on. I'm always on my phone or my iPad or my computer, and not just me, the data supports that as well. According to Nielsen research, traditional television viewing has gone down constantly for the last 5 years. An average American spends almost 3 hours every day looking at their personal devices, which is the first time the time spent on personal screens have surpassed the time spent on television.
Nin Ventures is a crowdfunded venture capital technology firm. Tell me how you're different from other crowdfunding platforms.
2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, VCs, and LPs. Fewer IPOs means less exits for VCs, which means no returns for LPs, and as a result, venture funds are on decline. When venture funds are on decline, startups don't get funded, lower employment rate, and slow economic growth. So to avoid this, in 2012, the Jobs Act was introduced, which allows entrepreneurs and companies to go out and crowdfund. Crowdfunding is the practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. Since 2014, the crowdfunding industry has grown from $16 billion to an estimated $34 billion in 2015, and is doubling or more every year. According to the World Bank estimate, crowdfunding will have a global market share of $96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several types of funding models, including awards, donations, equity, debt, lending. The two most popular types of crowdfunding methods are rewards and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business and sometimes even in return for gifts or thank you notes. For equity crowdfunding, the backer receives share of a company, usually in exchange of the money pledged. For NIN Ventures or NIN.VC, it will be limited partner interest in the NIN Ventures Technology QP Fund. However, there is a major flaw with crowdfunding in general, and that is what NIN.VC is solving. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, and more often follow-up financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposed investors to a whole new asset class, which the normal population never had the knowledge or expertise to invest in. About 99% of startups fail. On top of that, low minimum investments like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At NIN.VC, we solve all those issues. We provide diversification, we take board seat on all our investments, and lend the necessary support that an entrepreneur needs to build a business like they would get at a traditional venture capital fund. And we're also in a position to gauge and be a part of the valuation process when it comes to addressing dilution and follow-up financing rounds. However, the most important part that the investors care about is the ability to direct invest and enjoy direct returns, which is not the case with the traditional venture capital fund. NIN.VC has the best of both worlds. We are a hybrid between a traditional venture capital fund and a crowdfunding portal. Another feature that is unique to NIN.VC is transparency. Investors can attend our monthly calls, check our Facebook, Twitter, LinkedIn, etc. for more recent activities at NIN.VC. NIN.VC is currently open to accredited investors who can invest in the NIN Ventures Technology QP Fund using various different investment options like 401k, defined benefit plan, digital currencies like Litecoin, Dogecoin, or Bitcoin, or just a regular checkings or savings account with a minimum investment of $100,000. Yale is currently the best performing endowment fund in the United States. Since 2008 to 2015, Yale has increased its asset allocation in private equity and venture capital from 20.2% to 33%, out of which 16.3% is venture capital compared to 13.7% in 2014 and just 10% the previous year. In general, most people have a three-dimensional portfolio, which includes stocks, bonds, and money market. But if you look at Harvard and Yale's portfolio, they take a long-term approach and invest in alternatives like venture capital. Historically, if you look at U.S. Venture Capital Index and S&P 500, U.S. Venture Capital Index tends to outperform S&P 500, and they also have an inverse relationship. This type of investment strategy allows to achieve true diversification and also helps mitigate the risk involved in having only a stock and bond portfolio. Most people are indirectly invested in venture funds via a pension fund or any other investment vehicles. Crowdfunding allows them to directly invest in a fund of their choice by eliminating the middleman, that is the pension fund and their management fee, to generate higher returns.
Try to make people know what you do?
Yeah, I think part of our journey here at NIN.VC has become an educational process to educate investors, to educate entrepreneurs, because venture capital as an asset class is only available to the top 1% and the super wealthy. NIN.VC, we're the first fund that opened ourselves to accredited investors. When you expose an asset class or a financial instrument to people that have never invested in such vehicle before, it becomes an educational process. Since we're the first one, I feel like I'm educating people about what venture capital is, how the investment works, when do you see the returns coming in.
And this past year, it seems like there was a lot of noise about crowdfunding. Tell us a little bit about the overall trends that you anticipate for 2017, and seems to still need a lot of education. Tell us about that.
One of the biggest concerns that I have with the crowdfunding industry is we've made investments in companies available to everybody, but we haven't made investments in firms like ours made available to non-accredited investors. So if Currently, if you want to invest in an venture, you have to be an accredited investor, make more than $200,000 a year, or have a joint income of $300,000, excluding your primary residence. We expose investors to a risky asset class before we expose them to a less risk-averse asset class, which I think doesn't really make sense. We would like to open ourselves up to everyone. I believe venture capital as an asset class has been secretly guarded and has only been available to the top 1%, the super wealthy. I believe everybody should have access to venture capital, and I hope the SEC and the government will somehow keep that in consideration and make it available to everybody and not just accredited investors. So anybody can invest in the fund with any amount.
And they're certainly lowering the bar for individual investors all the time, and the crowdfunding technology is definitely a disruptive model.
Log on to www.nin.vc and explore the world of investments with us.
So how can you invest in nin.vc? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investment via a crowdfunding portal. However, investment in funds like ours is still limited to accredited investors. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology CP Fund. An accredited investor is an individual with an income of more than $200,000 per year, or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million, either individually or jointly, with his or her spouse, excluding the primary residence. For an entity, any trust with total assets in excess of $5 million qualifies. There are multiple ways to verify if you are an accredited investor. For an individual, it's an income, asset, and third-party verification. For entity, it's asset and third-party verification. So what are the multiple ways of investing in nin.vc? There are a wide range of options when it comes to investing in the NIN Ventures Technology QP Fund, using checking, savings account, defined benefit plans, self-directed IRAs, and digital currencies. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including venture funds. Some of the advantages of investing in a defined benefit plans are all contributions made to the plan and subsequently invested are top-line tax deductible to the business, whether the business is a sole proprietorship, LLC, LLP, PC, C Corp, or an S Corp. The investment growth is tax-deferred under the umbrella of the defined benefit plan. The contributions might be significantly greater than that of 401k profit sharing plan to help increase the retirement savings account for their business owners. To invest in NIN Ventures using your defined benefit plans, you must first sign up on nin.vc and verify that you are an accredited investor. The next step is to establish a defined benefit plan with Robin Weingart and Associates or an investment provider of your choice. Once the plan is established, the distribution is calculated and you can complete the subscription and payment process on nin.vc. We also let investors invest in our fund using retirement plans, for example, self-directed IRAs. Self-directed is a descriptive term that is used to describe how some IRA providers administer the assets they hold. With a self-directed IRA, the client controls what their IRA invests in. Self-directed IRA allows investors to hold alternative assets within their tax-deferred retirement plan, such as private placement and venture capital. Like any IRA investment, a self-directed IRA has built-in tax-deferred growth, and thus an individual will not pay capital gain taxes on the growth of the investment. The return will flow back to the investors and will not be taxable to the account holder. A self-directed IRA allows for true diversification that is otherwise not achievable to the standard IRA portfolio. To invest in NIN Ventures using your self-directed IRA, you must first sign up on nin.vc, verify that you are an accredited investor, and establish an IRA account with interest proof or a provider of your choice. Once the plan is established, you can complete the subscription and payment process on nin.vc. Digital currencies like Bitcoin, Litecoin, Dogecoin are emerging as a new form of alternative payments and global currencies. We at nin.vc understand the significance of this change and thus allow digital currency owners to obtain liquidity in return for investment in the NIN Ventures Technology Fund. Now let's go through the investment process step by step in detail. The first step is to visit min.vc and sign up. Sign up is simple. First name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, that is CPM, investor presentation, and other suggested readings. You get invited to attend our calls and events like this one. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a W-9 form and a subscription agreement. The last step is payment, and it's as simple as selecting a payment method and the amount you wish to invest. Please note, venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested readings on our website before making any investment decisions. Thank you for being on the call. Sign up on min.vc to begin your investment process, and feel free to reach us at contact@min.vc or 312-953-0920 to schedule one-on-one meetings or with any questions or material requests. Have a wonderful day and happy investing.